Welcome to The Explainer. Today, we're going to demystify the world of financial management. You know, how businesses actually make money, manage it, and plan for the future. We're going to turn all that textbook stuff into real-world practical wisdom. So let's kick things off with this really powerful idea. The whole job of a financial leader, it's totally changed. I mean, it's not just about counting the beans anymore. It's about helping the business actually win the game, shaping the strategy, and really driving that long-term sustainable growth. And this slide, it just lays it out so clearly. You can see the evolution right there. The role has gone from being, a back office number cruncher who's always looking in the rear view mirror to a forward-looking strategic partner who's right in the thick of it. We're talking everything from big mergers to HR. Okay, so if this new role is so powerful and strategic, what's the actual end game? What's the ultimate goal here? This is like the first huge question any financial manager has to tackle, because pretty much every other decision flows from this one. And it really boils down to this fundamental choice, this core debate. Are you just chasing short-term profits, trying to make a quick buck? Or are you trying to build real, sustainable, long-term value for the people who own the company? The modern way of thinking leans heavily towards wealth maximization, and for a good reason. It actually considers these super important factors of time and risk. Now, this is where things get really interesting, because this slide makes that abstract idea of risk something you can actually see. At first glance, right, product Y looks like the winner. It makes more money. But, and this is a huge but, if it's way riskier, investors are going to demand a much, much higher return to make that gamble worthwhile. A simple profit-only approach, it would completely miss this critical piece of the puzzle. All right, so let's move on to the next big challenge. Once you've got your goal locked in, you need fuel for the engine, right? And in business, that fuel is capital. The big question is, where do you get it from? First up, we've got a really common tool for those short-term hiccups, an overdraft. Think of it like a safety net for your business's bank account. It lets you cover your bills even if your balance dips into the red for a bit. It's super flexible, but you gotta remember, it's designed for quick gaps, not for funding your long-term ambitions. Now, for the bigger players, the companies with a really solid credit rating, there's another cool option, commercial paper. It's kind of like the company issues its own short-term IOU directly to investors. And a lot of the time, this can be a cheaper and way faster way to get cash than going through a bank for a loan. And of course, in today's world, everything is connected, and finance is absolutely global. You've got this thing called the euro currency market. It basically allows a company to borrow money in a completely different currency than the bank's home country. So you could be borrowing US dollars from a bank in London, for example. It's this massive, flexible market that pretty much operates outside the rules of any single country. But the world of finance isn't just standing still, it's always innovating. We're now seeing this whole new wave of funding tools that are tied directly to a company's values. You've got things like green bonds for projects that help the environment, or social bonds that fund things like public health initiatives. It's finance with a conscience, really. So you've got the money, and you can already start to see how the way you get that money, whether it's a quick overdraft or a really deliberate value-driven green bond, reflects that bigger goal we talked about at the start. So now what? How do you manage that money day to day? Well, that is the art of working capital management. It's all about making sure you always have enough cash on hand to pay your people, pay your suppliers, and, just keep the lights on. Okay, so a massive part of that daily cash grind is dealing with something called float. What is it? It's basically the time lag between when you make a sale and when that cash is actually sitting in your bank account, ready to be used. The whole game for a good financial manager is to shrink every single step of this journey, get that cash in the door as fast as humanly possible. But it's not all about the daily grind. Financial management is also about making these huge, high-stakes bets on the company's future. I mean, these are the massive investment decisions that can literally make or break a company for years, even decades to come. Before we dive into the technical stuff, just take a look at this question. Would you take a 50% chance of winning $10,000 or a 100% chance of getting $3,000 right here, right now? There's no right or wrong answer, really, but your choice says a lot about your own personal comfort with risk. And believe it or not, businesses are making these exact kinds of calls all the time, just with a lot more zeros on the end. So if you went for that guaranteed $3,000, that's what we call your certainty equivalent. It's a really key idea that managers use to weigh these risky projects. They're constantly asking, what's the guaranteed cash we take today, instead of gambling on a bigger but uncertain payoff down the road. This is the exact same logic an investor uses when they're looking at that safer product X versus the riskier product Y from earlier. Now, when you're making these massive bets, there is one huge psychological trap that gets everyone, from a global CEO right down to you and me, and it's called the sunk cost fallacy. And the number one rule, is so simple but so hard to follow. You have to ignore sunk costs. That money, it's gone. It's history. It doesn't matter if you spent $1,000 or $1 million on a project that's failing. Letting that past investment influence your decision to put even more money in is a classic mistake. The only thing that should matter is what the project's potential looks like from this moment forward. So we started this whole explainer talking about the new strategic role of a financial leader, right? And now hopefully you can see how all these different pieces, setting the main goal, figuring out funding, managing the day-to-day cash, and making those big bets, how they all fit together to create that modern role. You see, today's financial pro is so much more than an accountant. They're a master strategist. They are juggling everything you can imagine. Planning for cash needs, managing the risks of global currencies, building relationships with banks, and even handling huge corporate moves like acquisitions and telling the company's story to investors. And all of this brings us to the real key takeaway. These fundamental ideas, we're talking risk, return, building long-term value, and knowing when to walk away from a sunk cost, they don't just apply to some giant faceless corporation. No way. They apply to every single one of us. So the final question I want to leave you with is this. Finance is all about making strategic bets. What is the most important financial bet you need to make for your own future?